Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news all eyes are on China to see if they pull the trigger on their old stimulus playbook again. But first this week, the focal point will be on the United States, and that will revolve around the PCE price indexes and data on personal income and spending. Other key American data includes durable goods orders, their final fourth quarter GDP growth reading, a key consumer confidence survey, and housing market indicators. And there will be a busy week in Japan with the Bank of Japan minutes and data on their unemployment rate, industrial production, retail sales and housing starts. It will be a quieter week though for Chinese economic releases, but it will include data on industrial profits. And markets will pay close attention to potential stimulus announcements and how authorities will let the yuan's price shift. In Australia, February's inflation rate is expected on Wednesday and a rise is expected. Inflation expectation survey data may come in before that, and markets also await Westpac's consumer confidence survey results. And staying in Australia, there is plenty of evidence their housing market is back on a roll, with an active auction market this past weekend, and sales volumes seem to be high. Prices also seem to be rising. Behind it all is a shortage of housing as their inward migration levels rise fast. In China, incoming foreign direct investment fell more than 19% in February from a year ago, the largest fall since the GFC, and far more than in the early stages of the pandemic. Recent legal changes and the rise of the Ministry of State Security in the Middle Kingdom is making it too tough to operate there. The trade disengagement underway isn't ending. Only $14 billion arrived as investment in February, about half the stunted levels of 1 and 2 years ago. Meanwhile, China is making a concerted effort to qualify for the CPTPP trade group with a new negative list for cross-border trade management and services. The recent visits by Chinese Foreign Minister Wang Yi to both New Zealand and Australia in an unusual charm offensive by the usually prickly wolf warrior needs to be seen in the light of the CPTPP push. The US Treasury 10-year yield will start today at 4.20% and down 2 basis points from this time Saturday and down 11 basis points from a week ago. And the price of gold will start today firmer by $6 at $2,165 an ounce, but that is little different to week ago levels. And oil prices have stayed at $80.50 a barrel in the US, while international Brent price is still at $85 a barrel. These levels are also unchanged in a week. And the Kiwi dollar starts today at just under 59.9 US cents and marginally lower than this time Saturday. A week ago it was at 60.9 US cents, so a 1 cent fall since then. And it's the first time in 4 months that we've been below 60 US cents. Against the Aussie, we're marginally firmer at just over 92.1 Australian cents. Against the euro, we're still at 55.5 euro cents. That all means our trade-weighted index starts today at 69.3 and down 60 basis points in a week. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.